So I've got 8 currency pairs here with a 10 pip grid. Everybody's on the 4-hour chart. I'm at the maximum zoom out on the MT4 platform. And the question is, how many pips are you trying to make? If you're trying to make 10 pips, then I would say go to a smaller time frame. Now this is kind of difficult to say that you could get on this uptrend without getting clobbered somehow, because these pullbacks are enormous. These are obviously currently going up on the 4-hour, but as soon as you take this and go to here, you'd have to say, oh, it looks like just a trap up here, and everybody that sold up here just made a bunch of money off the treetop here for this monster pullback. Every time I come up there, just keep tugging it back. Once again, here's the wedge. This big wedge here, and the fact that you revisit, and this is on the euro to the yen now, the fact that you revisit this in a slam dash is no surprise. But the dynamic range of this market is so insane, because look at this quiet drift down, whereas this is a choppy. I mean, do you see any type of these are like almost like snowflakes. Sure, they look like snowflakes, but each move is unique. Each pullback is unique. Look at the wick on that. And on closing prices, you waited for the dust to settle after the big wick. Like so, if you're going to buy the hammer, say the market opens, spikes down, and goes like that, and you got this. You're either going to buy this with a stop here, or you're going to have stops here, or maybe you got a bunch of limits peppered in here to recapture possible retest. Same thing on the upside. You know, if you sold this top and you sold all the way into that, and eventually you made money back, but this is incredibly long. I don't think I want to wait this long for a setup. Now, people have buy limits down here, I suppose, but good luck getting filled in the next, unless something catastrophic happens. You could come back, slamming back to here, and just be like, bam, I'm out of that trade. But trying to make 10 pips. If that's all you're trying to make is 10 pips, and your spread's 3 now, or your spread's even 5, 10 pips is going to be 50%. You're paying 50% shipping, but if it's a good enough trade, now this is obviously going to be a 15-minute chart if you want to. This is 10 pips though, so maybe you have to. Maybe you can't trade that. You have to go to the 5-minute chart. So you can see all the setups on the 5-minute here. And if you're just running in, throwing in 15-minute buy limit banks, or you're hand placing orders on every 10 pip with a 15 pip stop to make 30, and you put it in like this. So if you have a 10 pip stop and you got a buy limit there, you didn't quite make your profit, and that's why you need an array of orders. You need some that are like this and they're like this, and this is just double your money. Not to say you can't have an entry down here where you get out way up here, but this would be the bigger grid bank. So that order is going to look like this. So you can see the size of order you're going to need to continually keep buying this. And of course, after that's the ride's over, you'd have to get back in. This is where you become all three of these are entries. Of course, you know that there's a hole down here. If you look at the there's a pocket here, and of course the sell stop or your sell limits got filled up for this crush down. But if you say you don't want to sell that, or you didn't catch that move, it's too late, you missed it. Since you know this price exists, and you know that this is 10 pips, and you know you can place buy limits here that cash out, say here, and then I don't know if you want to hold that through all this drama to get to this, because you could just buy it here again. So continually selling at the sell zone. Support and resistance really do exist. It's just that you got to keep reloading the gun. So after you kill the zombie, here's your first bottom. If you look right, you can see your fills. But the zombie keeps coming back for more. You know this low exists. You have a buy limit here. Didn't quite get filled here, but you're buying in a window. It's very narrow. Here you know you're filling this void here. You don't quite make it to here. If you sold here with too tight a stop, you got stopped out, but then you made it all back. If you kept plugging away, if you just kept plugging in, but this has to be, you have to calibrate your orders to what's here. So if this is 20 pips, you know that with 20 pip stops here, they would have blown you out. But eventually, when they took it all the way to the tippy top here, and this is the euro against the yen, which you see the same thing against the euro against the dollar, is that there's a 10 pip window up here where they nailed this puppy, and I don't know what the ask was when we were up here. So if you sold and the ask was too wide, they kicked you out. But if you have a cluster of orders that start here for the sell, and maybe you're in 52K, 37K, some weird ass, it wouldn't matter. And you're going to ride that puppy all the way back. The buyers are supposed to come in at this support. They crush them, they cut off their arms. Then all of a sudden this big hole here that's been forming for about 2 days, 2.5 days, all of a sudden this is really important. It's like 3 days really, if you consider this half day here. And just look at how they just crush through that hole. Now you get this big vacuum here. For the 20 pip bouncer scripts, I mean, if you're buying into this with longer term orders on another broker, you're fucking up on the trade. In fact, your target's going to be where the bottom dropped out. We could drift back up here and then go. But this kind of sideways action, I just don't see why this isn't tradable. And this is not going to work for a moving average. This is the 5-minute chart. How are you going to run a moving average on that? And are you really going to look at a what period moving average are you going to run on this fucking noise? Now, this noise floor, we set, sometimes, look at this, just barely a few pips. But if you're not afraid of making 10 pips, or 15 or 20 pips with a 10 pip stop, trade this currency. As long as the spread isn't too bad. Here now, the spread's getting kind of bad here, and of course this is closing price spread, so I don't know what the hell is going on there. That could be just okay. So let's go to the other. So here's all the other currency pairs, and even if you take this to the 15-minute, not till you get to the 5-minute can you see a trade to make 10 pips. Easily make 10 pips, because you can see where the support and resistance is. You can see it and a maximum zoom out, 5-minute chart. But look at this thing dipping into this window. Look at this complete chop garbage here. Big irrational exuberance run up into, so this triple bottom exists. This is some big deal. You could have kept, once you get the first bottom, you would just keep rebuying that bottom. You get the first bottom, rebuy here, until they crush you out, because the problem is that whole time that nothing's been happening, supposedly nothing's been happening, you got this big hole forming. And now we're going to go fill that puppy. And whereas the first bounce on this 5-minute chart is right off of here, where everybody assumes, well, this is where the buyers will come in, and sure enough they do. but just for a little bit, for about 12 pip bounce. They do come in. And then we go into this chop, drift down chop, and people are buying. This is the 5-minute chart. If you zoomed in, you could see all the, here's a triple bottom, bang, 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 breakout. That's not a bad run. I mean, that's 20 pips. But constantly in a 10 pip volley, you got to be, with this, as long as the spread's tight, and here the big rush up into this triple bottom. If you take this internal bottom from this day and carry it forward here, so you see, and plus you just filled this. This is like your cup. You're filling these holes here. Big run up, backfill. Buyers come in, ride it. Anybody that buys here is hoping that, it's just going to crack through here and just go zooming up. Just fizzles out in Asia. And here you just get this 10 to 20 pip volley going. So on the Australia CAD, this is the one that these empowered trading people had their system set up to point out to you the big amazing Gartley that formed here. I think, as I remember it, they were saying, there's Gartleys all over the place here. Yeah, all these pullbacks are giving people these, look, I have a bat dick. Yeah, listen, it doesn't matter. All that matters is that right up here on the Australia CAD, you've got a ledge here of stops. And if your sell limits are up here, for only a 30 pip kickback with a stop here, this is resistance within a 10 pip window. Now this is the trap. So I bought the trap down here. This is the other trap I did on the other video. The trap comes down here and you make it to your target. Then we fall through again. Target's met. 10 pip window, 20 pip, 30 pip exits. 10 pip window. But you can't think about trend because you think about voids. You think about this because if you're thinking about trend, you're going to be like, we're in an uptrend. I'm only going to take buys. Well, why don't you take this sell here? Well, it's just having a bias has got to be the worst thing in the world. You would think, right? Because you're not objective. This bottom becomes the top. But why would you sell? You're in an uptrend. Why are you selling here? You're in an uptrend. People say it's a grind to trade. Well, of course. It's triple bottom in a 10 pip window to make 20 pips. I don't think you're over trading. You're on the 1 hour chart here, mind you. This is not a lot of trading. You can certainly plan out the trades for next week. It's not that hard. I think as long as you don't overload the account. I don't think it's now 10 pips. Go to the Australia versus the now this thing's dead in the water, quiet. Look at this chop. They're just obliterating people's notion that it's going anywhere. I mean, really? And then that how to read a price chart. It's more like how to read your balance in your account. Like how much money you're trying to make. This is the 15-minute 10 pip grid on the Australia versus US. You've got to be kidding me. You see a Gartley in there? All I see is, holy God, super dynamic market ranging to the maximum. G. Willikers, my moving average system kicked in here and called this whole move up here. Yeah, but how'd you deal with this pullback? I mean, what the fuck? So it's nothing but trap upon trap upon trap. Let's trap these guys. This is the low of the previous day. Up trap. Now I used to do the trap trade. This is the ultimate trap trade right now. Look at all these traps. Up, double bottom. Up, gotcha. Oh, come up here. Oh, gotcha. So it's nothing but gotcha moves. Here's an internal 15-minute bottom. That people bought there. People bought there thinking it's going up. Where are they going to get the fuck out 2 days later when they're like, oh my God? Yeah, they balanced their books. Not to mention, if it is supposedly everybody's trading this, right? Everything from a robot to a human. And so where's the value zone if you just pick out and shade in the 10 pip windows here? If you just take this trusty rectangle and just block off the 10 pip range there, and it just becomes very obvious, very painfully obvious, that this is a big place to sell over and over again. Over and over again. And I keep replacing the same stupid ass order there. And where fair value would be, say, the middle of the road, right? Down here. So you're cashing out here, but it's also the place to get back in and go the other way. So it's very, if you have a 10 pip support and resistance window, every time we dip into this well, or dip out of it, you know, if this is your sell window and you've got orders up there, and you just constantly, now you wouldn't have, if you have a day job, you could trade like this because you don't have to, not to mention this amazing triple top outside of the, this is a big deal. And there's a huge feeding frenzy in the 10 pip window. The first time we break out here, and it's a complete, on the 15-minute chart. Now, you can only imagine the daily has about a 5 pip wick at the very top of that. And people have trend lines here. I'm just saying people could. I mean, you know, you could make the argument for any move in here. And where does it, so if I bought here, and then the market goes crushing against me, and I'm like, holy shit. I mean, we broke out. I got confirmation. And then when it finally makes it back to here, I dump everything. I sell all my longs because I'm like, damn, I'll never do that again. Comes back here. Now, the people that keep buying in this 10 pip window down here are just cleaning up. And then they sell here as it comes up, and they make a little counter trend move there. Obviously, the trend starts immediately. Here is a drifting up on close. Here's your first pullback to go long. You know, this is your first, comes back into this wedge. The market coils up, explodes. So this is the cause, and there's the effect. So it's always going to be cause, a longer cause, a big effect. It could just as well have gone up. So here is the trap. Double bottom becomes a double top on the 15. We bunch up. Inability to keep tanking. So everybody's like, holy God. And these traps on the Australia versus the USD, I used to watch this thing in the morning and say, hell, I'm just going to buy this fucking fake break out of the floor of, and actually retested this, let's see if I can zoom in here without, but there's so much money, there's so many pips in this, in just these 15-minute charts. This was the low of that day. Never made it down here. Here's the wick. But right in this area here, if these are all your buy limits, and you didn't get, maybe you got filled on an assortment here, and your first cash outs here and the rest of that rides, in one day, and look at this smash down here, and you come into Asia and just buy the retests of that for an easy 10 pips. You could have rode it all the way to here. You could have rode it all the way to this bottom. So this internal bottom becomes this top, and just up and down, up and down. Now this to me is more realistic trading. Could you have had a Gartley on the underneath somewhere in here? So you had some master plan, this advanced pattern bullshit, and you're like, well, yeah, can't you see this fucking Batwing? Holy fuck! Here is the C to the B to the D to the F. And besides, I've got also these Gartleys inside of this Gartley, which even confirms this even fucking more. Well, Jesus, man. I mean, come on. Really, after this big flash crash, and then we get a, if you just bought the retest here, what's more likely? Your fantasy trades of Gartleys where they never happen, channels that exist temporarily, even trend lines that, you know what, it's all well and good until, isn't it just about price? Can the market see a trend line? Can the market see a moving average? Fuck no. So sadly, it's just about price. So here's a whatever supply zone, demand zone, vice versa. Can you draw a trend line here and get this breakout, pullback, find support? Sure, but in the end, isn't it really about, is that just an artifact of market movement, or is the fact that what's really going on is there are people long this market and short this market that are, they don't want to be in a losing trade for more than an hour, and you can see their view of it. So anytime the market goes into these clusters and flags out, you know, if this is going to hold, this dips down here, but why such a vicious move out of there? Because right in here is just a big, this triangle here is a retest sell. So we come back up into these, and it doesn't have to be a triangle, it could be a flag, anything you want to call it. You could just call it garbage. This is a trend. In my opinion, that's a trend. This is what's the trend for the day? Down. Like, if you're buying into that, you're getting stopped out. All you have to do is look back. You don't need 40 days or 80 days of data to make 10, 20, 30 pips. And if you see the double bottom becomes the top, becomes the bottom here, if you carry that forward, this is a big deal. This cluster here is a big price feeding zone. You don't need market profile. I tried it all. I'm just saying, for me, fuck all that shit. Market profile is just another thing to pay attention to that's just going to blow your brain out. The fact that the market keeps dipping into this 10 pip or even this 10 pip window and keeps going up and comes up in this 10 pip window and keeps going down, I think that's all that matters. This is really what the market looks like. It's pretty fucking ugly. It's not a pretty, you can put Gartleys on it. You can do all that stuff, and you can try to build a robot to trade this, but, you know, unless the robot's going to say, you know what, oh, that was great, let's put another Solem up here. You got to come back and put the same, of course, you got all day to do that, same trade over and over again. So a 15-minute chart, maximum zoom out, you don't need to go to the daily chart. When people start to go, well, let's go look at the daily, I'm like, okay, well, obviously you're trying to make 50 pips now, and you're going to wait a long time to get filled. It's just unnecessary. You know, if you're trying to make 10 lousy pips, I mean, look at the 1 minute chart. You're trying to make 10 pips on this? Oh God! I mean, now you're sitting with your finger on the trigger here, and maybe you do have a buy limit staggered in here, 5 pips apart, starting right here. And when the market comes down, bam, 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 you're in, and then you're out. And you're selling up into this, and then here's this. You make your 20 pips. You make your 18 pips. You know, this is highly active. This is a 1 minute chart. You got to be on this thing. If 10 pips is what you're trying to make, you have to go to the time frame that currency is telling you to trade. You can't pick the time frame. If you have a 10 pip stop and you look at this, you're going to be like, fuck, are you kidding me? Like, what are you, nuts? So taking a scalping rig of 20 pips and trying to apply that to a bunch of currency pairs, like, look at this smash down here. You need to be trading 25 pips apart on grids here to take this punishment of this currency coming down into here. This is a ridiculous amount. So you're going to start buying, say, here, but you cannot have your orders in unless you have a master stop way down here to gobble up this whole spike move here in advance. You can plan all this out. This is the current void forming, and here's the current void that's filling. And when we get to here, the sellers are coming in. This is stupid, right? But how much are they going to come in for? For a 30 pip pullback? Okay, well, it's a lot to manage, but you could set all these up Sunday night, all these trades, and maybe you don't get filled, and maybe they blow you out, but maybe you made money on your other trade. It's a lot to pay attention to. I think if you're got your finger on the trigger on a 1 minute chart, a 5 minute chart, that you can see the 5 minute rhythm world. Here's the dollar to the yen. Once again, 10 lousy pips on here. 10 pip grid. Wow, this is a lot of pips. So you're a slave to the time frame, because there is no way that you're going to pick, with a 10 pip stop, 20 pip stop to make 30, 40 pips. Those are good trades, right? There's no way you're going to pick that time frame. I mean, if this was the Australian dollar on the 1 minute chart, you see it's a completely different world, because you probably have to go to the 5 minute chart here. I'd say a 5 minute chart is the ultimate chart, because you can scalp it, you can swing it. Here you can see the double bottom clearly on the 5 minute. You revisit, you're out. So even here on this ridiculous currency that these guys are trying to make this money on, and with their amazing, see here, maybe the 15-minute chart, because I'm not seeing the density of pips here. But the 5 and the 15, here's an obvious setup. This double bottom exists internally from the bottom of that day back there. If you carry that forward, you see the bounce. People made a little bit of dough. Then up again into the same window. That's the 10 pip sell window. And just place your orders in here, maybe 1 pip apart, 2 pips apart. And here is the big kahuna going the other way. This low exists. There's the bounce failure into here. It's just back and forth, back and forth. Buys and sells. 5, 10, 8, 12 pip, 15 pip stops to make. I'd say some of those have to be better than double your money, and some have to be worse. So if you have an equal amount, if you say you have one that's only going to make less than double your money, you should have a double your money overlapping that a slightly different price, because then you can pick up that trade going that way. Here is the rally up into last known bottom on the 15, and you really have to place this sell limit after it breaks out. You place a sell limit here, because if it does come back, this is your classic breakout, pullback, get in. See that a million times. Breaks out, this double top pulls back 10 pips, you get in, right? Top becomes bottom. That's how the top does become a bottom. And constantly here, just to make a few pips in Asia, just scalping that thing. And if you just trade more, just trade twice as big as you normally trade, now you're making double the money. And so if you like to trade, and some people call it over trading, I call it trading, but as long as you're willing to be on the 15 and the 5-minute chart for your setups, hell, do it. You're going to make more money, and you can still use the 15-minute chart and the half-hour chart to analyze all the trades that you would take if you were not a day trader. You can see the sell line up here. So it's pretty stupid obvious. And here's the breakout trap. They rip it all the way back, and they trounce all the way back into that triple top. The internal triple top becomes a bottom. It's just over and over again. It's a sick, perverted. For the breakout traders that are like, oh look, it's going up. Oh yeah, how's that working for you? Oh well, it's going down. Oh, I sold here. I sold here. It's going down. I just got confirmation. I got a big bearish engulf. Oh, how's that working out for you? Oh, not so good. Oh, hey, I'm finally right. But yeah, I blew up my account during this phase, because I had this big daily view in my mind that we were in a downtrend. Ruh-roh.